be interactive?
It's an interactive thing. So you're free to raise a question. So you
Okay,
don't
no
need to
problem.
mute your mics.
Okay.
Yeah. So this is the chart. Gotta start with a plain chart. Let me start with AUD USD. So basically, this is what we do. You're all seeing my chart? Hello? Guys, you're all seeing my chart.
Yes.
So we already start with the monthly. You understand? We start with the monthly, thereafter we go to the weekly, thereafter we go to the daily. So these are the time frames that we are going to be watching for the direction bias. You understand? Hope I'm clear. Can I have any reply?
You're good to go.
I'm good to go. Alright, so I was still explaining that you start from the monthly chart, thereafter you go to the weekly chart, thereafter we go to the daily chart. Those are the direction bias timeframes. So you have to make sure that the current bias is bullish on the monthly. As you can all see. Hello? Guys, am I clear?
It is.
Yeah, you're good.
Yes.
So I was telling that you start from the monthly chart and you determine the direction of bias, it's the upside. Hope you're all seeing that. So we are looking for bullish candles on the monthly. So as we can see, it's the current candle is bullish. So after confirming that the current candle is bullish on the monthly chart, we shall go to the weekly chart to make sure that the current candle is also bullish. After confirming that the current candle on the weekly chart is also bullish, thereafter we shall go to the daily chart as our last chart for the direction of bias. You understand? So those are the three time frames that we shall be using for the direction of bias. So I think you guys got the MT5 platform that has got the custom time frames that we do need basically for our zoning.
What I see is a MT4 chart on your screen. Might be you are open another screen.
Yeah, this is now MT5, or I have to share the. Let me see. You're seeing the MT5 chart?
No, it's a IC market chart.
Yeah, this is
I'm seeing
MT5.
I'm seeing the XM.
XM, yeah, that's the MT5. So I was still explaining that you look at the monthly chart, you see you have to confirm that the current is this, let me admit. So you have to confirm that the directional bias on the monthly is to the upside. If at all you're looking for demand zones, sniper entries basing on supply and demand, you have to look at the monthly time frame and confirm that the current bias is to the upside and it's bullish. You have to be seeing green candles, no matter the color that you're using. You could be using blue. So you have to confirm that the current trend is to the upside on the monthly. Thereafter you go to the weekly time frame. You have to confirm that it's the same thing that is on the weekly. Thereafter you have to go to the daily. It's the very same thing that is on the daily. So those are the time frames that you'll be looking at as an intraday trader Thereafter, we shall be going to the H2 time frame. This is the H2 time frame. Now what's wrong? So this is the H2 time frame. Hope all of you guys are seeing my screen. Guys, are you seeing my screen?
Yeah.
Yes.
So this is what we are going to be looking for. Let me share something, the whiteboard. Share. So this is what we are looking for. We say that we shall be looking at the monthly chart, and we shall be looking at the weekly chart, and then we shall also be looking at the daily chart.
Can you repeat once again?
Pardon? We as intraday traders, we shall be looking at these 3 time frames for the directional bias. You understand? You have to make sure that the current candle on the monthly time frame is green. You have to make sure that the current candle on the weekly time frame is green. And you have to make sure that the current candle, the last day or the previous day candle is also green. You understand this? Guys, you understand? So
Yes.
basically, you're looking for this. This is what you're looking for. You're looking for a green candle on the monthly chart, a green candle on the weekly chart, and a green candle on the daily chart. So this is the previous day's candle. So you'll be having something like this. I'm assuming this is the running candle. So this running candle on the daily chart will tend to retest the lows. It will tend to retest the lows. There will be imbalances in the previous day that will be tested. There will be orders that will be unfilled. So the banks will tend to fill those orders before they mark up the markets. You understand, guys?
Okay.
Yes.
Yeah. So our target is catching this retracement on the daily. Are you guys understanding?
Yes.
Am I clear? So our target is to catch the retracement to the lows. There will be always a good demand zone in the previous day. The previous day trading session that the banks tend to retest before they mark up the markets, because they will never leave any orders unfilled. They always have to come and fill up those orders before they mark up the markets. It's the same thing that will always happen on the weekly. I'm sure you already see such weeks that tend to come down and the market marks up. Weeks that tend to come down on the monthly chart and then the market marks up. That means that there were orders that were not filled. They had to fill them up before marking up the markets. So we are going to try to time the retracement into a good demand zone in the previous. Now this will be the previous week's trading session. So here it will be the previous day's trading session. You understand, guys?
Okay.
Yeah.
Yes.
So let's look for the same thing on the chart. I'll use for the sake of so let's look for the same thing. I don't know which example to start with. So I think let's start with Euro USD chart. Let me get a clean chart here. Okay, let's start with the AUD USD. So what's on the monthly? We are seeing that this is bullish, 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 bullish. So the current bias is to the upside and the trend is to the uptrend, and the current candle is green. You understand? So we shall move to the weekly time frame. We see the same thing. Bullish, 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 bullish. So we always take an assumption that the next candle will also close bullish. Yes, you understand?
Okay.
Yeah, so we move to the daily. Hope you can see. It was bullish. This is the current day. It's bullish. Previous day, this was Friday, right? We see the Friday price was bullish. It closed at a bullish candle on Friday, and we can see that on Thursday it was a retracement, and we can see that on Wednesday it was a what? A bullish candle. So we are trying to time the lows of the previous day candle. So I'll take an assumption. So for this case, this is MT4. I'll move to the H1 because I don't have H2 on MT4. So I'll move to the H1. Hope you all know how to activate the period separators. Do you all know, guys, how to activate the period separators to put them on your chart?
Yeah.
You just press Ctrl Y. Ctrl Y. They'll appear. So they'll help us distinguish the trading range for every day once we move to the lower time frames. So now let's move to the H1 because we want to monitor the trading activity of Friday. We have to, if at all we are to take trades on Monday, we have to analyze on Friday. We wait for a retest of lows of Friday on Monday so as the markets to mark up. Before the markets mark up on Monday, they'll tend to retest the lows of Friday. You understand? But basically, we as intraday traders, we shall not be trading Monday. You understand? It will be for guys that are handling the weekly time frame. We as intraday traders, we shall not be handling the Monday. Monday is for the retest of the weekly traders. So for us, we shall only be trading from Tuesday, Wednesday, Thursday, and Friday. But you can take risk and trade if at all an opportunity avails itself on Monday. So now we are looking at that. We want to time the trades that we would have called today on AUD USD because we've seen that the current bias is to the upside on the monthly chart. The same bias is to the upside on the daily chart. We are seeing bullish candle on the monthly, bullish candle on the weekly chart, and we're also seeing a bullish candle on the daily chart. So that means that all the three directional bias time frames are well aligned. So we are meant to catch the lows of Friday on Monday. So let's see that on the H1. As you can see, this trading range is for Monday, and this was Friday. Hope you guys, you see that? I seeing my chart, guys?
Yeah.
Yeah, so we are meant to look for a good imbalance that happened on Friday. Is there any good imbalance that happened on Friday?
Yeah.
Where is it?
Bullish
There is
move
this one here. So I'll get my rectangle. There is this zone here. But it was retested. Are you seeing all this long wick here? That was a sign that the banks had to come and fill all those orders that were in here. So we don't expect a retrace on the following day. That's why you're seeing the price never had time to come back and retest this region here. Where is my tool? That's why price never came back to test this demand zone that is just at the low. This was the low of Friday, and this was the high of Friday. That was the high of Friday. This was the high of Friday, and this was the low of Friday. When market is in an uptrend, we are aiming at catching demand zones that are close to the lows. And if at all the price is in a downtrend, that's when you're having a bearish candle on the monthly chart, a bearish candle on the weekly chart, and a bearish candle on the daily chart. So you'll be aiming at catching the sniper entries at the highs of the daily candles. So for this case, we are aiming at catching the demand zones that are adjacent to the daily lows. And this was the low of the day, and this was the good imbalance that we can see that is close to the current market price. The zone has to be close to the current market price. If at all we are considering priorities, we wouldn't take this zone, but rather we would take this zone that is close to the low of Friday. Why? Because we always take a zone that is close to the current market price. You understand, guys? Hope guys I'm clear. So I want us to go through some examples.
So that's what's on Friday. How about on Monday we do analysis the market?
On Monday, it's better you wait for the candle close on Monday, then you wait for the retest of the Monday lows for the case of uptrend. When you're having a bullish on the monthly, weekly, and the daily, that's when you'll be tracking the lows of Monday. You'll be waiting for the Tuesday trading retest of the lows of Monday. So if at all it's a downtrend, you'll be waiting for the retest of the highs of Monday. Am I clear?
Can you just go back to the Aussie USD pair? I would like to see if Friday there was an opportunity to trade on Monday.
There was an opportunity. The opportunity is here.
So that was Friday itself.
Are you seeing this? Are you seeing this zone? It's a drop-based rally. But are you seeing this long wick here?
So how do I trade on Friday when I analyze on Thursday?
How do you trade on Friday when you analyzed on Thursday?
Yeah.
So for that case, we are looking for demand zones, right?
Yeah.
And this trading range here that you're seeing was Thursday. This was Thursday, and then this was Friday, and this is Monday, right? So you're going to come to Thursday and look for a good demand zone, because remember the market is marking up on the monthly, on the weekly, and the daily. You understand? So before the price marks up, it will tend to retest the lows of, it will tend to retest the imbalances that are close to the lows, because it's marking up. You understand? So which good demand zone are you seeing on Thursday?
There is no demand zone.
So that means that it was not tradable. So let's move to Wednesday. This was Wednesday, right?
Yeah.
So are you seeing any good opportunity on Wednesday?
Yeah.
So you analyze the market after you wait for the Wednesday close. This was the Wednesday trading range. You wait for the Wednesday trading range to close. Once the Wednesday trading range is closed, so now you come and look for imbalances that are close to the lows of that trading range. As we can see, this is the high of Wednesday, right?
Yeah.
Again, this is the high of Wednesday, and then you can also mark the low of Wednesday. This is the low of Wednesday, right? So you mark a good imbalance that is close to the low and close to the market price. And we all know that by the time the Wednesday trading range ends, the price is at this point, right? So what good imbalance is close to the low and it is close to the current market price? A good imbalance. In other words, that is not retested.
Yeah, that bearish candle.
Are you seeing this candle here?
Yeah.
This is the good zone. it is not retested.
Yeah.
So you're going to do this. So that's the zone that you're timing on Thursday. Before the market marks up, it will tend to retest this zone, because remember, the market is marking up on the monthly chart, it's marking up on the weekly chart, it's marking up on the daily chart. So we expect the same thing on the daily chart, sorry, on the 1 hour chart. So the market had to retest the lows of Wednesday before it marks up. Let me try to delete this.
So if the setup markup
Okay,
shows on
sorry.
Wednesday and I get the opportunity on Thursday to trade, what would be my risk reward and my target?
Let's first look at entries, then we shall look at the targets.
Okay.
Because the student never covered targets, but I personally have been trading supply and demand for almost now like 6 months. So I know how to time targets. But once he covers that, I'll teach that too. But I can explain to you how I time targets using supply and demand.
All right. Okay.
Yeah. So this is the zone. So we can decide to drill it down further to reduce on the risk. Because you can see this is this would be let me see. We would be risking these are 18 pips, right? So let's see if at all we can reduce the risk. Where is the imbalance? It's right here. Where is the clean breakout? Are you seeing the clean breakout? This is the clean breakout. Are you seeing the clean breakout, guys?
Yeah.
This is the bearish candle. Then we are seeing a clean breakout. This candle broke the highs of this bearish candle. So that makes it a clean breakout. So this was a clean breakout of this imbalance. So this marks it as an imbalance. So this would be our timing. So we would wait for price on Thursday to come and retest this imbalance that was formed on Wednesday before the price marks up, before it realigns with the monthly. And as you can see, we got this sniper entry here at the proximal line here. Hope you can see that, guys.
Yeah.
You understand how we analyze?
Yeah. I understand.
Yeah.
How we
Can
manage
we
trade?
Pardon?
How we manage the trades?
How we manage the trades? We shall cover that. I just wanted you to look at getting entries first.
Okay, no problem.
Yeah, because the student also has just told me how to manage the entries. But I know how to manage the trade, don't worry. I'll explain that because I've been trading supply and demand for almost 6 months now. So now we can take a look at the gold. This is the trade which William Johnson commanded for it to turn at this point. You saw that? That post, I think I dropped it in the group. So let's try to analyze the reason as to why he commanded it to turn. This is when he made the analysis. So I'll decide to place this. I'll try to make it bright. And I'll make this solid. And for this, okay. So this is the time by which William Johnson made the analysis. So let's try to look on the monthly chart. What are you seeing? It's bullish, right?
Yeah.
So we go to the weekly. This. What are you seeing on the weekly? It's bullish, right? Bullish candle. So you go to the daily. What were you seeing by this time? You made the analysis. It was a green candle, right?
Yeah.
So that confirms that the directional bias was to the upside. Everything was bullish, 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 right?
I've got a
So
question.
once you, yeah, which question is that?
Weekly, currently the running candle is bullish, but the previous candle is bearish.
By the time he made the analysis, the candle was, are you seeing this red line, this thick red line?
Okay.
Yeah, so this is the time he made the analysis. The previous candle was bullish. The previous daily candle was bullish, and also the current candle was bullish. So that's what you'll have to look for.
Okay.
So after confirming the directional bias is bullish throughout, that means that all the three directional time frames are well aligned to the upside. So what are we timing? We are timing the retest of the lows of the previous trading range day. We are looking at the imbalances that were formed close to the current market price and close to the lows of the previous day before the market marks up, because generally it's marking up throughout all the three directional bias time frames, right? So now let's look at the H1. So now when he came to the H1, this is the time he made the analysis. He made it on, this was, I don't know, this was, I don't remember which day was this, but as you can see, he looked for a good imbalance that was close to the current market price and close to the low. So this is the high of that day. I'll assume it was a Thursday. You can cross check to confirm the day. I don't know the day it was, but this was the high. You're seeing that is the high of that day, and this is the low of that day. So what are we looking for? We are looking for the closest imbalance that is close to the current market price and close to the low. Which imbalance are you seeing that has got a clean breakout? Are you seeing this rally-based rally?
Yeah.
It's close to the current market price. This was the current market price by the time he was making the analysis. This was the this was the current market price by the time he made the analysis, and he posted it to the group that price is going to turn right away after this thing. So this is the clean breakout. You know what is meant by a clean breakout. If at all you don't understand, I'll address that in the group. So this is the imbalance that has got a clean breakout with a good 2-to-1 ratio imbalance. So he decided to drill this down further. Oh no, let me use the 15. So this is the zone. And you're seeing how price came and kissed the level and then it rallied off. Why? Because the level had a clean breakout. You understand, guys?
Yeah.
Yeah. So we can also take a look at this opportunity that happened on the Euro USD. This was Monday. This is Friday. This was Thursday. So if at all you made analysis on Thursday, you'd have called this sniper entry before the market decided to mark up. Right? This is 82 pips currently. So you could look at the monthly chart on the Euro USD chart. What's the direction? It's bullish. It's a bullish candle, right? On the monthly. You look at the weekly chart. What's the current candle? It's also bullish. The last week was also bullish. So now you go to the daily. The last day was bullish, and this is the current day. So this is the current day. We are not meant to trade at the current day. We are meant to wait for the price to retest the previous day analysis. You understand?
Mm-hmm.
So right now it's late. We can't trade. We have to wait for this candle to close. Then we make analysis basing on this candle on the H1. So when this trading range is filled up, I think it will be filled up very soon. So we make analysis and then we wait for price. Tomorrow is Tuesday. So we shall wait for the price on Tuesday to come and retest. Currently, Euro USD is marking up, right? Because we've seen that the direction is to the upside on the monthly, weekly, and the daily. They are all bullish candles that are running currently. So we come to the H1 and we look to the closest imbalance that was formed, and it is close to the lows and highs. For this case, we are in an uptrend, so we are looking for an imbalance that is close to the lows and close to the current market price. Well, are you seeing any zone that is close to the low? Because we are in an uptrend, we need an imbalance that is close to the low and close to the current market price. Are you seeing any good zone right here? Any good demand zone? Everything was tested, right? Yeah, so that means that the Euro USD is currently not availing us with any good opportunity that is worth taking a risk. By using this opportunity here that availed itself on Thursday.
Yeah, I got a question.
I think this gap. What question is that?
Yeah, how was this Thursday imbalance was plotted?
This imbalance here, it is a gap up. Price gap down and then it gapped up, implying there were a lot of orders there. You know that the priorities of imbalances, we start with always gaps. From gaps, then we look at strong ERC candles, extended range candles. These are the extended range candles. You're seeing them? These very strong momentum candles. But if at all I see a very small zone with small candles, but with a gap up, I'd rather take a zone with a gap up other than taking this zone. Because the order is gaps, from gaps then to ERCs, then from ERCs, then you can look at something of such a kind. You understand?
So gap can be
so
called.
I'd rather. Pardon?
So gap can be called as an imbalance.
Yeah, a gap is an imbalance. A gap is created due to insufficient of orders for them to be executed fully. So that's why you're seeing the price had to come and fill this gap that was created here. This imbalance, the imbalance led to the creation of that gap. So the price had to go and look for sell orders so as to come and pair them with the too much buy orders that were in this imbalance. Because remember here, I'm assuming that there were 1,000 buy orders, but the current market price wasn't availing the 1,000 sell orders. Because remember, for someone to buy, there has to be someone that is willing to sell. So the market has to look for, I'll assume that there were only 300 sell orders that filled the partial of 1,000 buy orders that were placed at this point. So the price had to look for the 700 sell orders. It got them from this point, and it came and paired them with the remaining what? With the remaining 700 buy orders. So the market had to rally to the upside. You understand?
So on Friday, we don't find any imbalance on Thursday closure.
On Thursday?
Yeah.
This is Thursday. Which imbalance is close to the current market price and it's non-tested? Are you looking at this zone? This zone was taken out. It was taken out. Are you seeing that? So it's no longer valid. It was taken out.
So by the time you have a pending order here, that will be taken out.
By the time I told you that you wait for that day to close, then you make analysis. So now you're going to wait for this day trading range to be closed and you make analysis basing on this trading range. You understand?
Okay.
So for this case, I'll be assuming that you had to wait for something like this. Let me disable this auto scroll. So you had to look for something like this. Are you seeing that? So the trading range for that day, it was filled up. So now you open up your PC and you make analysis for tomorrow. I'm assuming this is midnight. So you'd be seeing that this demand zone was already taken out, so you couldn't place your limit order here. But you're seeing that, but you're seeing that this imbalance here, it wasn't taken out. So you'll place your pending buy limit order here. And all you have to do the next day is to wait for your order to be executed. Nothing else. So as you can see, the price had to go and you had to pick your order and it had to rally to the upside. You understand?
Got it.
So we've seen the Euro USD example, we've seen the gold example. This is the AUD USD. Hope we've seen the AUD USD. Let's look at the GBP USD. So this is one of the trade that I managed to catch today. What's on the monthly? It's a bullish candle, right? Green. What's last week's candle? Last week's candle is green, right?
Yeah.
What's last day's candle? It's green, right? So once you confirm that there are 3 bullish candles on the 1, 2, 3 time frames, what you have to do is to go to the H1. So this is Monday. So I had to make the analysis over the weekend. So which imbalance are you seeing that is has got a clean breakout and is close to the low, because the market is bullish throughout all the 3 time frames? There is this low here, and this is the high of Friday. This is the high of Friday, this is the low of Friday. We are looking for an imbalance that is close to the low of Friday and close to the current market price. This is where the price closed on Friday. So we shall be looking for a zone that is close to the low and close to the current market price. This is, and it must have a clean breakout, and this is the zone that has a clean breakout. You're seeing it, a rally based rally, 2 to 1 extended range candles. So you had to place here your pending buy limit order at the proximal line, and as you can see, it was triggered. What was the drawdown? Let's check on the drawdown. The drawdown was 5 pips, right? It was 5 pips. To make, my target was this rally based drop. So I'll be exiting at around this point, and that's 50 pips approximately. 40 pips, right? Yeah, that's 40 pips. So my exit is around here. That will be my exit. So, but we shall look at the entries and exits. Sorry, we shall look at the profit targets later. I just wanted you to go mark your charts and time entries, right? So when you get back, you go and look for the entries. I think you saw this trade that was posted by most of the students, right? This is USD card. Why did they take this trade? This is the monthly chart, and you're seeing that the current trend is to the downside and it's bearish. Sorry, you're seeing red candles, right?
Yeah.
So you go to the weekly, you're seeing red candles, right? The last week's candle was bearish, right? So what is your aim? To catch the highs of the previous day, right?
Yep.
Before the market marks down, you have to catch the highs of the previous day before it goes down. So I'll assume that these candles were not existing. So this is a Monday, this was Friday, this was a Thursday, this is a Monday, this is Friday, this is Thursday, this is Wednesday, this is Tuesday. So I'm assuming that you're making analysis on Tuesday, right? This is 1, 2, 3, 4, 5. So look in the 50 trading range. This is 1, 2, 3, 4, 5. I'm assuming this is when you made your analysis that the market is marking down on the 3 time frames. So I'm assuming that this trading range had closed like so. So you're looking for a supply zone that is close to the highs of that day, close to the highs and close to the current market price. You understand?
Okay.
So what zone is close to the current market price and close to the highs? This is the high of this day and this is the low of this day. So you're looking for a zone that is close to the highs and close to the current market price. Which zone are you seeing? There is this zone that is it's a rally base and a drop. It got a clean break. It's not a clean breakout because it took it two candles to break out, but it's a good zone, right? So this had to be the zone. This had to be the zone. I'll use a body tweak. That was the zone, right? So when you drill it down to the
Well, I have a question here.
Yeah, what's the question?
Yeah, can you just move to the Tuesday's chart where you enter? Uh, okay, let me come to the Monday's chart, because when the Mondays have got top and bottom, we have an imbalance there as well. So on Tuesday we have a pending order on Monday's imbalance, and which was not triggered.
Yeah.
So we
Which
ignored that.
imbalance is that?
Yeah, can you come to the Monday's chart?
Monday's chart, USD cut?
Yes. Because what I'm trying
Right.
to find out, like if we trade on Wednesday, then we would be finding the imbalance of Tuesdays. So on Tuesday's market, we would check for imbalance on Mondays. So Mondays, I do see an imbalance.
So this is what?
No,
This
not the
is
current market.
Tuesday.
Previous on 11th August, what you are finding on imbalance on Tuesday, there's an imbalance.
11th. Yeah. Remember what did we see on the 3 direction bias time frames? What did we see? It was a bearish, right?
Yeah, bearish. Yeah. So Monday market got started.
So what are you looking for in the bearish bias? You're looking for highs,
Okay.
right?
Yeah. Right.
Highs of the previous day. You're looking for imbalances that are close to the highs, because remember there is money resting above those highs. So price will tend to reverse those imbalances before it marks down, before it realigns itself with the 3 directional bias time frames. It will tend to retest those highs before it rallies all the way down. You understand?
Right.
Hope I've cleared your point.
No, on Monday, 10th August.
10th
The,
of August, yeah, it is easy, right? So
yeah.
you're looking for a supply zone that
Yeah.
is close to the current market price.
Yeah.
So this is the zone, right?
Yes.
And it is close to the highs.
Right.
It wasn't triggered. You have to extend to the next day.
So that
You understand?
order we. Yeah. Right. So on.
You'd have to close this order
I have to.
because it wasn't triggered then the following day. Because remember, we are looking at our orders being refilled the following day, right?
Okay. So that my
So
question.
since our order wasn't triggered, we have to delete that order.
Right. Okay. Got it.
Yeah. So you have to delete your order and then analyze for the next day. The next day you got a good imbalance, which is right here.
Understood.
So you wait for this imbalance. If at all it's also not filled, you delete it. You analyze for the next day, like that.
Understood.
But this was filled. As we can see, we drill it down this was after we had drilled it down. This was the trade.
Yeah.
You'd be timing these lows, and that would have given you something like This is 70 pips to, you're risking 8 pips, approximately 9 pips to gain 70 pips. Hope that's a good risk to reward. Let's look at USD CHF. You're seeing this?
Well, now on the next topic, I would like to ask, like, now we are looking at 3 time frame to find out the directional bias. What if in between there is some time frame where we see a opposite direction? You would like to
We
trade,
have,
or yeah,
we have to wait for realignment. Because basically what we are trading is realignment. You understand?
okay.
Yeah. I don't know, where did I see that? There was this opportunity that availed. I hope you're seeing what I meant, that gaps are very, very high odds when you're analyzing
Yeah,
compared to even ERCs. This is a trade that happened today, but it wasn't filled due to the spreads, I'm sure. Because what was the, let's look at the, what is the bias to the, on the monthly? It's to the upside, because we're seeing the current candle is bullish. Let's go to the weekly. The current week is bullish. The previous week is also bullish, was also, sorry, bullish. And then we go to the daily. The previous day was bearish, right? So the bearish candle is just a retracement. So in other words, we anticipate that the next candle will be a continuation. This is just a retracement of the daily time frame, because
So,
what we can see on the weekly, it's a bullish candle, right? Sorry, on the weekly it was a bearish candle lastly.
weekly ended with a bullish, but the Friday closing was bearish.
A bearish, yeah.
Still, we consider
So
this.
you consider that as a retracement, because
Okay,
remember that 2 time frames, these are the kings of the daily. They rule over the daily.
great.
So this is a retracement, so you'll be timing the lows of that retracement on the next day.
Okay.
So on Monday, if at all you trade on Monday, but we are not weekly traders, so we don't trade on Monday. But for those who trade the weekly, use the H4. So they will be looking at this imbalance that is right here, that was filled on Monday, and the price had to mark up, which was further drilled down to the M15. You're seeing it's a good imbalance with a gap up. So that means there were a lot of orders that weren't filled. So the price had to go and look for the sell orders to come and pair up with the remaining buy orders for it to mark up. Hope you've understood, guys.
So the imbalance we need to check on the M15 time frame or H1.
You can decide to drill it down to reduce the risk to reward.
Yeah. Okay.
If at all the H1 is offering a bigger risk, you can decide to drill it down to the M15 or even the M5.
Correct.
But you always miss a lot of setups if at all you over drill it down to the very, very low time frames. Unless when the imbalance is really very clean on the lower time frames, that's when you can take it.
So we better draw proximal and distal line on H1 and can drill
H1
down to the, yeah.
to the M15 at least
Yeah.
to the M15.
M15, yeah.
Yeah.
Sounds good. Yeah.
So hope you've understood the concept. That was the introduction part. That's why we looked at the introduction part. Any question?
So apart from the monthly candle running, what if, like, if the monthly setup looks like a pin bar where the direction is not clear on monthly, or either in the weekly, a dozy candle when it's closed, there is no set way to find whether it is buy or sell, or a bullish or a bearish candle. That situation, what we gonna do? You look for a previous candle that before week.
You're saying that in case the previous week was it ended as a week of indecision.
Yeah, like USD MXN was something a kind of.
I really didn't ask about that. I'll try to ask him.
Yeah, at that time we will consider the higher time frame monthly as a direction.
I'm very sure because always the monthly rules over all these time frames. The weekly rules over all these time frames, and the daily rules over the H4 downwards, and the
Mm,
H4 always rules over H1 M15 and M5, and the H1 always rules over the M15 M5 and M1.
yeah, got you.
Yeah, so I believe that the higher time frame has got more powers over the lower time frames.
Sure.
So I'll try to teach you guys how I do my sequence and realign, because I've also been using it in my own supply and demand. I've been using it in my own supply and demand, as you can see. This is can show you, this is the Euro USD chart. I'll try to get the Euro USD. So I'm good at sequence and realignment. So I'll teach you that. So this was the trade that I had to predict basing on sequence and realignment. Let me get something. Sorry. Let me try to show you something here. The before of that analysis on the Euro USD. So this was the before. You're seeing that?
Mm-hmm.
And that was the after. It's all based on sequence and realignment. I'll teach you sequence and realignment in the coming sessions. So this was the before, AUD USD, and that was the after. Are you saying? You anticipate that price had to come and react with this zone here to realign with the daily and the monthly and the weekly. And that's what the price did exactly. Though it had to trade into the zone, it had to penetrate it deeper, but it didn't hit the stop loss, because remember, we always leave a padding for the stop loss when we are placing our orders.
What was weekly and monthly?
Pardon?
What was on weekly and monthly?
The weekly was up and the monthly was up. So we are saying that the H4 had gone out of alignment. Are you seeing this trend
Okay.
line break? Are you seeing this ascending trend line that was broken right here?
Mm-hmm.
So I anticipate that the price had to come and react with this demand zone that is nested within the daily. Are you seeing these green proximal lines here?
Yeah, yeah, yeah.
This is a daily demand zone. So I anticipate that the price had to come and revisit the daily demand so as to mark up again. And that's what the price real exactly did on that. As you can see, the price had to revisit the daily demand zone. This is the H4. But once you switch to the the daily chart, you'll be seeing a demand zone, a good demand zone that was revisited Once price revisited it, it started making new highs and lows, higher lows. The same thing with the Euro or USD. I anticipate that the price had to come into this daily demand zone and hit this H1 imbalance that is nested within the daily. It's a good imbalance that is nested within the daily demand zone. And since the monthly, the weekly were up and the daily were up, so I anticipate that the H1 had to make a small correction to realign with the bigger time frames, because remember, the bigger time frames will always rule over the small time frames, right? You understand, guys?
Yeah.
So that's what happened exactly. This is the after. The price had to come into this daily demand zone that I marked. It had to react with this H1 imbalance. It gave a good reaction. And then it had to pick all the remaining orders that were left at this tip here. Once they were picked, the price marked up as it was anticipated here. Sorry. As it was anticipated here. You understand? So with time, we shall get to know how we analyze basing on sequence and realignment. You always look for a time frame that is out of alignment. You go down to the lower time frames to find the zones where you anticipate to get the reactions from for the price to realign with the bigger time frames. Because remember, the higher time frames will always rule over the lower time frames. No matter you having a good supply zone here, let me see, no matter you have a good supply zone that has all the 10 to 10 score, it will always be violated. Reason being, you do not follow what they call sequence and realignment. You're taking this supply zone that is right here, you'll get a very small reaction and you'll be taken out because you didn't follow what they call sequence and realignment. And that's what you should follow as a trader.
If I take trades on 1 minute time frame, then which high time frame I can follow?
Pardon?
If I trade on lower time frame,
Yeah,
below 5 minutes, then which high time frame I follow?
5 minutes. The H1
Yeah,
will always rule the H1 will always rule over the M5. You understand?
Okay.
So you have to determine the directional bias on the H1 to trade on the M5. You understand?
Okay. If below 5 minutes, 1 minute or 2 minutes, something like.
M1, M5, M2,
Yeah,
all are ruled by H1.
H1 only H1 and
Yeah, H4 rules H1.
okay,
H4 rules H1 and M15 and M30. You understand?
okay.
Yeah. So
So
that's what you have to look for always.
I got a question here.
Yeah.
So on Euro USD, you have plotted a proximal line and distal line on daily time frame, but if
Yeah.
still you look for an entry on the proximal line, or you look for a down time frame to look for a sniper entry.
If at all your account size is not big enough, you'll not have to take the daily. But there are people with big accounts who can decide to take the daily. And there are those who have small accounts that will have to risk very less of their capital. That's why you're seeing that I had to drill down this daily zone into the M. This is the H1. That's reducing it from, this was over 40 pips to 18 pips, right?
Yeah.
So you're moving from a risk of $4 to a risk of $1.8, right? On
Right.
a standard account. So we can see GBP USD. This one didn't give us any good reaction as expected, but it was still I expected a retest of these highs here, and then I expect the price to drop down, tries to realign itself. All right. This was an invalidated setup. So I'll share with you guys my channel where you can see all this analysis that I always drop there. This was the before. I anticipate that the price would come and react here, and it would realign itself because the daily, the weekly, and the monthly were all down. So as to realign with the weekly and the monthly. And we can see it's the same thing that happened, only that we had a little kind of a fake out, and then the price had to realign itself just as it was anticipated. You understand, guys? Hope that's all. Any question? Guys, are you having any question? I'm going to end the meeting.
What
Which
what
you have
indicator
shown.
do you use for those zones?
Pardon?
What indicator do you use for those zones?
I'll share them in the group.
Okay, thank you.
All right. So it was nice to have you guys today.
Thank you. Will this Zoom presentation be recorded so we can go back and listen for those that didn't come up hop on
Yeah,
at
it's
the?
recorded. It's recorded.
Okay, thank you.
All right. So I'm ending the meeting, guys.
Thank you, sir. Have a good one.
All right.
Thank you.
Thank you.
Welcome.
Thank you.
Welcome.